All right, what's going on, you guys? This is Eric here with Investor Central Club, Stacks AI Software. It is August 6th. It's a Wednesday. We've got earnings coming up for quite a few names. App, IONQ, SYM, Duolingo, ELF, DraftKings, Jack in the Box, JOBY. We got a couple of names coming up tomorrow as well, but we've got 30 minutes till close. Wanted to give you guys a little bit of the flow. We'll see if Max joins us too. Talk a little bit about what's to expect. First one I know a lot of people are looking at, App Lovin'. Want to make sure that you guys see this. On the flow, hold on. Let me reset that real quick. Yep. On the flow for App Lovin', we do have these unusual puts that were just purchased earlier today, about 30 minutes ago actually. They're aiming for the 300 strike, which is pretty ridiculous at the end of this month. So I think that's kind of it's an extreme move, dropping 23%. IV is only at 84% for that. So it's the volume, 400 of those, 176K. I feel like that's just looking like a hedge in terms of it. Then what we also have we have these puts that came in yesterday in the morning for the end of the week, aiming for below 360. That's a little bit more reasonable. 2.37 million spent on that. 1.3K for each of those positions. So keep that in mind. The ones that I will say earlier in the week and last week, we did see a lot of we actually saw a lot of calls come in. 2.14 mil, aiming for 420 above at middle of next month, so September 19th. Then this one short term, 815, so end of next week, 420 as well, 1.25 mil. 88, 400, 1.5 mil. Keep in mind these, in terms of an earnings play, these are pretty pricey. So personally, I'm staying away from this name, but I will say, at least leading up through last week, look at all these. For the 15th, 410, 444K, all over the place, about 200 at a time. So sentiment leading up through the week, or at least up through last week, was definitely more bullish. I will say these puts that were purchased, at least the unusual ones, seem to be more of a hedge in case they see a big drop. This one, the puts for this though, end of the week, they're going to lose that 2.3 mil if that doesn't make that move downward. But I do believe that most of the sentiment that I'm seeing seems to be pretty bullish for App Lovin'. Dark pool, we do have a little bit of buying, but not that much this last month. 38 mil, 31 mil, 47 mil. Now, what kind of sticks out to me is these insider trades, but this was for last month. And it's still trading right around that same range, 380 or so. So we did see the CFO sell some shares, 2 mil there. Harold Chen sold 6 mil and 10 mil. And that's back at the beginning of actually 2 months ago. So June. Now if I go through and I pull up my trading view. All right, App Lovin's all the way up here. And what I was saying is it's kind of in this upward channel. Kind of just down near the bottom of that channel at this point. But ever since April till now, first off, from April to the highs, it's already gained 113%. April to today is at about 98 or 95% right there. So overall, there are some signs that it's starting to see a little bit of overbought sentiment. Not completely, though. It's not even completely above on that stochastic. But I would definitely say, PE ratio 71. If they do report a solid earnings, which it seems like the last few earnings they've been doing pretty good, we could see this pop a little bit more. So if you're on the bullish side of it, I definitely would say we could see it break 400, retest. There's a gap up here up till 415 or so. The high of that, pop up through June is up at 428. Oh yeah, I got a haircut a little bit ago because my little boy has been in the grabby phase. He's 6 months old right now, and he's been pulling hair. So cut my hair so it's a little bit easier to deal with. And plus, when I play basketball, it's been getting in my face. So I don't want to wear a headband anymore. AppLovin on the low side, if we see it break down below this 380, that's why I see them aiming for that 360 range. It definitely could come back down over here. There is a little bit of a gap left for it to fill. So, that would be my bearish case on it. But in terms of what I had to say in our, let me pull this up. Oh, there's the little boy. One sec. Oh, little tumble. Oh, Theodore. All right. Let me know if he gets a little loud here. But, oh, there we go. There's Max. What's going on, Max? We are live.
Oh, wait, I can't hear you. Shoot. Audio. Oh, whoops. There we go. Yeah. Ooh.
Sorry, I think I just had myself muted. Okay, let me go over that one more time. AppLovin earnings today after close. The focus is the AI-driven ad tech pivot, CTV expansion, and high growth margins. Like you guys just saw on stacks, last week we had heavy bullish flow, but for some short-term puts did come in this week. One of them I would say definitely looks more like a hedge because they're aiming for all the way down to 300, which is a pretty extensive move, about 23%. Most of those positions are spending over $1,000 per contract. Some of them are 2K or more. So be wary of that earnings risk. If it goes against you, especially those short-term ones, you could very quickly see that premium drop 99% by the next day. Charts in an upward channel. The name is up over 100% since the April tariff lows. So if we break above that 403, we could see 428. If we break below 380, we definitely could see 360. Estimates, EPS 1.96 estimate, up from the 89 cents year over year. Revenue growth 71% year over year in ad tech, and about 13% total revenue growth. Average analyst price target is at 471%, so a 30% upside from where we currently are. Now the bullish case, they're lean, they're profitable, 1.2 billion in ad revenue, and 81 EBITDA margin. Exited the mobile gaming biz to focus on scalable AI ad tech. I will make a point about this. I do happen to know one of the parents that of the players that I coach in basketball was actually talking to me about how he's extremely bullish on AppLovin due to the fact that it is a platform that they use in their business. And this AI ad that they have is, I think, people are underestimating how powerful it possibly could be. Now, obviously, we'll see if it is going to be reflected within the margins and reflected within this report. Launching CTV ads with Whirl platform, new monetization vertical, building machine learning tools for automated ad generation and e-com targeting. That's what he was talking about. They have a lot of new tools that help people target and make more money, and in return, their ads do very well. Consensus strong by 18 analysts, some price targets as high as 650. So I want you to remember this. This is all information that is out there. So, the question I would say right now is, with this chart, is that already priced in? Especially since last earnings, you'll start to see they start, the pop up high and then the sell back off. We're still headed further up at this point. But will we see a pullback after this earnings because something, isn't digested or isn't liked by the analysts and the market? So the risk that we have, the growth is priced in. Like I said, any revenue or AI stumble could lead to a pullback. Macro ad spending softness is a headwind. And then, for example, you have to remember right now there's a lot of businesses are tightening up. One of the main things you can notice is, especially with our jobs reports that we've been seeing, a lot of companies are holding off on hiring because at the end of the day, they need to watch their bottom line. So especially with the tariffs and things like that, there's less money circulating in terms of the economy, and that can affect these big tech companies. High IV, expect major reaction either way. Okay, so like I said, this was screenshot a little bit earlier, but if I go back into my stacks over here, you guys can see that top one is the one that's a little bit more concerning, but you will have to consider, okay, so they bought those puts. They also sold these calls for 500. So, are they playing that spread right there? Okay. Max, you got anything to say about AppLovin?
No, I mean, that was just basically my whole recap. So
Yeah. It is a company I would say in the long run is something I'm fairly bullish on. Earnings, like I've said for a lot of the predictions we had recently, not necessarily going to react that way, because if too much of it's already been priced into the markets before this, we could still see an adverse reaction. But what you're looking for is, if it does drop, does it get snatched up quickly? Because I do think in the long run, we should see this name head higher. All right. What else we got? So before I jump into the other analysis, I do want to share this one with you guys, because we don't see this happen too often. Stacks AI had a pretty unusual print today. We saw Snapchat, which did just report yesterday, and we saw it drop. It was like at 10, almost 11 bucks, and it dropped now to like right under 8. So pretty adverse reaction. I was already telling you guys yesterday during our live stream, Snapchat usually tanks after earnings. It's just one of those names where, as much as people might like them, it usually drops off. And we did see these two for June of next year. $13 strike, which is a pretty solid move. That's what, 67% from where we are right now. It's trading at $7.77. And they spent right under $5 million on this. I actually saw one of our prints that I think combined there was almost 5.5 mil spent on Snapchat. 64 to 63 cents. They purchased what? Almost 40,000 contracts twice. So, what are they expecting with that? Well, if I pull up Snapchat on the big picture, guys. So this is just the daily. Pull up the weekly. All right, this ugly candle coming down. I put a white line right there. That's kind of where we're close to where we're at, or close to the bottom of where we're at. The only other time you would have been able to get Snapchat for a cheaper valuation was back in the end of 2018. Okay, so in terms of a Stacks AI big bet on the upside, I kind of agree with it. The thing about it is, Snapchat as a company, there are a lot of other competitors out there. At least for me and my generation, I don't know anybody who still uses Snapchat. Most people are on Instagram, maybe TikTok, other platforms instead. But if you were to get in on Snapchat, this is kind of the area you want. It's in a fearful stage. It just had an earnings where realistically it missed, but only by a little bit, realistically. it does bring in revenue of 1.35 bill a year or this quarter. But earnings overall, you can see they're still losing money. They have a net margin this last quarter of negative 19, almost 20%. On an annual basis, negative 13%. So, they do have, ad revenue, and they are starting to build that side of the business. There is a lot of talks about, the best thing is for this company to eventually get bought out or, acquired by somebody else. But I would say, for the upside and for something like Stacks AI, this is something where I can see the upside coming, and especially because they bought all the way for the middle of 2026, you've got some time. And especially if you're on a smaller account type of thing, which I know a lot of people are, that would not be a bad play to get into. So that's just my suggestion of it. If you are looking at that Snapchat, especially with the earnings yesterday, pretty big reaction to the downside, even though they narrowly missed their estimates. Got anything to say about that, Max?
Yeah, this is a perfect time to average down. Those calls went 160% earlier. I've been tracking them since the print. So you could have made 160%. I think currently they're down. Let me check. Yeah, this would be a great average down opportunity. They're down 25% right now. So if you haven't gotten in, this could be your time to maybe build a starter position if you're in that small account, because that's where you can give yourself a little more wiggle room before they go back to break even. I personally am in snap calls, $10 calls for 1017. I got in at 0.14 and they're currently up 21%.
Yeah,
So I
definitely
think,
something worth looking
but
at.
here's the problem. So, I one of my past jobs, I helped build the SMB ads department for Twitter. And one of Snapchat's biggest issues right now is how their ads are set up. So for, I think like a year, they had advertisers paying less money on accident basically. So like they would get a quote, but that quote should have been like 30 to 40%, 25 to 40% more than what they were like given basically. So now that's why it seems like the company keeps losing money because their ad margins are so bad. And quite frankly, the big draw to them right now and the thing they just keep upgrading are like their filtering systems and AI capabilities, which are great. But the thing about AI right now and the state of it is people are done with the hype and now people want results because we've had 3 years of like it can do this, it can do this. And if you go and look back at predictive analytics, those were cool for the first 3 to 4 years. And then AI came along to enhance them. So now what you need to be thinking is one, what are these people or companies doing to enhance their AI portfolio in a sense? And then two, what is that next logical step from AI, which I can give you the answer right now. And there's a reason, and there's two companies that are actually reporting tomorrow that got price upgrades. Well, one got a price upgrade, and that is quantum computing. IONQ and Rigetti actually were just upgraded because they both are putting out quantum computers. IBM is going to be the dinosaur that gets Dell and all these other companies on board once they release their model. But quantum computing is going to have its moment that NVIDIA had with the Blackwell system in the next, I would say, 6 to 18 months. So I would stop looking at the hype around AI and start looking at practicality and profit because that's what the street's going to be looking for. So, in terms of Snapchat, yeah, it's great, but they need to get this ad revenue situation figured out. And then, most importantly, they need to show they're just more than an AR company that can put dog ears on me if I want to send a picture to someone. Because people are kind of over that fad and they want results. And that's really what I would say. So far I've put out 20 earnings previews this week, Eric. And I would say the biggest thing I'm seeing is people are kind of tired of like, this is what we're gonna do. Like Lisa Su is probably the worst, by the way, offender of doing this. Because AMD makes these lofty announcements and then they go, and we'll tell you in our next earnings report how we're gonna do all this. It's
Yep.
the most annoying
That's why
thing
we saw
ever.
AMD drop. Yep.
Well, it does it every quarter because Lisa takes the same approach. She makes lofty goals and she makes lofty claims with no real backing. Like if you go back and listen to their last earnings call, the MI3 chips that just got banned in China were the ones that were supposed to make this quarter, by the way. And now she just basically went from, oh, well, we're not going to do the MI320s, we're going to do the MI350s now, which are accepted in China. So it's kind of like, okay, so are those going to end up with a ban or a shortage? Or are you not going to have capacity to actually build them? So, guys, I want to stress the importance of like understanding what did these companies say in their last earnings call because that is what people are expecting in the next earnings call.
Agreed.
So that's really the big part that, and I've been tracking earnings for about 2 years now in terms of like tracking what to expect and then what happens after the fact. And we actually started a new series where I go after each day, I kind of go over like the biggest earnings reports that were reported. So today we did Disney, Disney, and a couple others, like in 5 other companies. Yesterday we did Palantir and Hims. Today we're gonna do some more. And I'm while on this stream currently writing the trade desk earnings preview while talking to you all about this. So talk about some multitasking skills here. I also just put out a D-Wave QBTS earnings preview as well. I'm not going to do one for IONQ because that's pre-market tomorrow, so it would really be useless to you guys. But yeah, I would say that would be my biggest thing on Snapchat is they need to show not only are they AR and AI, but they can get this ad revenue debacle kind of taken care of in a sense.
All right, yeah. Number one, if you guys are not already part of the Discord, but you still want some of Max's write-ups, his Substack is down below for you guys to check out. So go into the description box below and you can find that there. On the other hand, one second, Theo. Okay, let me talk to these people. On the other hand, again, we will always have these written up before earnings, and then on my channel as well, I'll try to give you guys the charts and go over a little bit of what's shown on stacks. IONQ, I thought it reports.
They're pre-market
No,
tomorrow.
it should be today. Here, let me show you.
Oh yeah, they're post-market today.
Yeah, post market today. They're coming up.
Oh yeah, no. So them and Apple. Yeah, that's my bad. So I'm not writing like a ton on the post-market stuff today. Granted, IonQ would have been the really only one, and maybe DraftKings, just because we're coming into sports season, aka NFL preseason. College football is going to start kicking up, so they're going to start getting a lot of DAUs, daily active users, and their daily revenue should also shoot up as well. But yeah, anything that I'm writing up right now is going to be for pre-market tomorrow. Yeah, pre-market tomorrow, and now I'm working on after close for tomorrow.
All right, let me quickly go over some stacks for you guys just to see what's coming on. IONQ. I will point out IONQ looks like they don't make very good money at this point. It's all speculation of what their future is going to look like. Nothing right now in terms of anything extreme that I can see. You've got a lot of short-term calls that came in. So if I filter for the buys, you do have these calls that came in earlier, but you do also have some unusual puts. Almost about a $500,000 aiming for 47 by Friday, and then you also have about a little over 200K aiming for below 38 and 35. So this one, I will say the chart doesn't look too bad right now, but overall, I don't see any too much conviction as to what I'd like to see in stacks for something like this before an earnings report. Other one, this one was an interesting one. ELF. You just see puts coming in here, but I will point out, I believe this is the one that Michael Burry actually he sold off all of his other holdings, and this is the one company that he decided to buy. And this was a little bit ago, and it's a makeup company. He is expecting recession to hit, but women will still continue to wear makeup. So I do believe there's some sort of like lipstick indicator as well. Like I think when recessionary times hit, like sales of lipstick tend to go up or something like that. Don't quote me on that, but I do believe there's something like that. It's also when recessions hit, men stop buying underwear, which is another recessionary indicator that can pop up as well. DraftKings.
Eric, that's true. It is. It's the lipstick indicator because that's linked to the stripper indicator.
Ah, there we go.
Because basically, when strippers stop getting tips and stop getting more customers and increased traffic, that's signs of a recession because when their economy is good, they're typically getting tipped out frequently. And whenever we are in a recession, lipstick sales go up because those are the one things that women will buy as a luxury item that doesn't break the bank.
Oh,
So typically,
Jenny did just correct us though. It's Estee Lauder, EL, not Elf. Very good. But yeah, like you said, lipstick indicator, stripper indicator. There's a lot of interesting ones out there. Male underwear indicator. That's you believe what you want to believe. DraftKings, just like Max said, we do have a lot of sports coming back into season. DraftKings looks like it's a little bit more on the bullish end when it comes down to the calls that are coming in. We do have these puts. 700K came in for under 43, so it's trading at 45. That's not too big of a move either, too.
can you check the insider sells if there are any from the last month? Because that's also something I'm starting to do insider seller.
CLO bought a little bit, but then they sold. This one's pretty big. This chief legal officer sold almost 4.59 mil on that.
This week?
Middle of last month.
I would say then so usually I was talking to one of my buddies who I used to do like forecasting with because I started to do these insider sell reports, and we came up with the range of 3 to 6 or no 1 to 3 weeks out basically is where like you need to be cautious going into earnings plays, especially for like I mean obviously someone like Coinbase, if we're gonna see that like the Friday before or the week before or the week of, right? But for these kind of smaller, like DraftKings isn't a small name necessarily, but it's not like a heavy options ticker that we always see. It's more like of an event-based ticker, I would say, i.e. earnings, beginning of sports seasons, some kind of partnership, whatever the case might be, right? So that's just one thing I've also been tracking to help me kind of not predict earnings, but give me a little more sentiment is the insider and political tracker that we have on Stacks AI as well. And those are also reports that I'm starting to produce daily as well of the biggest insider sells and biggest political trades of the day, the week, the last couple days if the volume's low, whatever that circumstance might be.
Yep. JOBY right here, we do see 6 million being sold by this Paul SCIARRA. It doesn't look like he has a exact title on here. You could look it up yourself. The other cells on here are all kind of small, but we'll see how things move. We did just see market close. Let's jump over to my charts and we'll take a peek over there. I'll let Max do a little more commentary because Theodore seems to be a little fussy right now.
Yeah, so basically this earnings season right now that we're in is all about great, like plans sound great, but people want results. So I think the last thing he was going over was JOBY, so I can pull up my stacks instance here. And with Joby, we're looking at from this week, the 4th to the 6th. So this week we're not really seeing much activity with Joby from stacks for the most part, or at least from what okay, I did spell that right. But some things we have covered so far this week, we have Celsius and D-Wave, aka QBTS, coming tomorrow. And these are two that should be pretty interesting. Based on what IONQ does today, that'll give us a pretty good indicator of what QBTS is going to do. These are both companies that, again, think of quantum computing as of when Jensen first announced the Blackwell system for NVIDIA's environment. Not necessarily a bad thing, but it's a lot of speculation right now without a lot of proof or, well, concepts for that matter. Now, however, these companies are getting upgraded by firms, but that is, again, a hopium play. It's kind of like when we see a lot of puts starting to get bought in ETFs when we see bad economic data. It doesn't necessarily mean that we're going to see a drop, but it also shows that people aren't necessarily sold. In this case, we are looking at people who are looking to hedge into the future. Because again, we are looking at tech companies. So let's start off with QBTS. So they have been riding a fresh wave of investor excitement thanks to tangible quantum plus AI use cases and deep tech hardware innovations. We're up 6.5% already in August, fueled by new real-world results and cutting-edge R&D. It's still tiny compared to its $6 billion market cap in terms of revenue, but the question is whether the start of something is coming, or is this just another quantum hype cycle that we're going to eventually see die out? Because again, these narratives do matter. Like right now, if you guys are confused as to why Open Door sank, do you want to know what people think of Open Door? People thought it was going to be Zillow, but with AI. But what the narrative is turned into for them is they are now just Walmart if Zillow sold houses the way Walmart sells Target goods, basically. So Open Door is being compared to the Walmart of Zillow, basically. So market cap, again, we're looking at 6 billion. Our year-to-date performance is up 100% plus on the year. Gross margins are at 83.2%, and the analyst median profit take is $20. That's a 12.7% upside. Now, for valuation context, market cap vastly outpaces 9 million in revenue in 2024, by the way, and that's less than 9 million. Now, the bull case in this case, quantum AI use case delivers measurable gains. So in Japan, tobacco improved drug discovery, speed, and results. With Jülich Supercomputing Center, better protein data, DNA binding predictions, and Triumph, a Canadian company, significant simulation speeds. Now, why does this matter? These aren't just lab demos, they're early real-world validations that quantum can outperform classical computing in targeted problems. And that's one of the things that is brought up about quantum computers, is they'll be able to help predict markets, predict weather, speed up drug studies, speed up FDA approvals, because what takes a traditional computer to process data points, instead of binary zeros and ones, this thing can look at code as 0, 1, or both, which now allows it to transfer data lawlessly, basically, because now it's not trying to make a decision, it's just trying to pass the data through, if that makes sense. Like right now, the feed you guys are watching are binary zeros and ones being packaged as 0 or 1. It can't be 0, 1, or both. Now, the next thing is the NASA partnership on next-gen hardware, developing superconducting bump bond interconnects for higher qubit density and better coherence times. That probably makes no sense, but it's a key step toward the company's 100,000 qubit roadmap and scalable quantum processors. By the way, a qubit is a quantum processor. Just think when you hear qubit, think like that's a data point. That's a processor for that computer. Now, AI plus quantum integration toolkit, open source developer tools enabling integrations into modern ML architectures. Now, this matters because it expands the developer ecosystem, which is very important in these kinds of worlds. Because think about AI with ChatGPT. What was the first thing people did? Make their own GPT agents, right? So, what are people going to want to do? They're going to want to be able to take their AI systems, their large language models, which are just data processing models, basically, and attach them to quantum because they'll be able to make decisive decisions and better predictions, basically, by allowing these developers to take that open sourceness that quantum computing is and integrate it with AI to make these AI models just that much more effective. And then we also finally, for the bull case, have institutional buy-ins here. We have major ads from DE Shaw, up 9,000%, BlackRock up 63%, and Vanguard up 58% in Q1. Now, why does this matter? Big money is betting. This isn't just hype. You think DE Shaw, BlackRock, and Vanguard are interested in losing hundreds of millions of dollars on this narrative? I don't think so, because we saw similar things when AI first came to fruition here. Now, the bear case, tiny revenue versus a massive valuation. And if you grew up in the Bay Area or you grew up in Silicon Valley or ever worked in Silicon Valley, you'll know the biggest Achilles heel for these YC Combinator startups are always going to be some massive valuation where people are dumping money into a product that can never yield the results that were promised in these lofty, sexy demos that they put out in pitch decks. We have less than $9 million in revenue in 2024, and they have a $6 billion market cap. One stumble in execution or funding could absolutely crush our sentiment here. And then we also have insider selling. CEO Alan Barrett's sold 14.4 million in stock this year. No insider buys are currently being reported, and this signals management may see limited near-term upside before they can start producing the results that would make them confident enough to hold that stock for a little bit longer. But this also could just be profit taking, because we see Jensen Huang. I remember, was it like a year ago when he was selling like 10 million a week or something like that, or like 10 million a day for 2 weeks? It was something insane, but it was just him taking profit from that lofty valuation and those gains that he was making. So it's not always a bad sign. If we saw multiple people from the C-level board or board members or management selling stocks off at, or if Alan was selling 14.4 million in blocks every day, then that might raise some red flags. And then quantum is still in the early stage. Again, this is a lot like AI. So this might be something where you buy it and you don't look at it for 18 months, because we're not really going to hear much in terms of development or bottom line pressure. Commercial scalability is like years away, by the way, with this. Like, we're not talking, oh, like those crappy Dell computers that your company gives you and goes, we're all a family. No, we're talking like these things are very complicated to put together as is, and there are very few companies that can actually produce them, because the R&D to get these made pretty much kills any bottom line of profitability that you could think of. Current investor enthusiasm may be ahead of real monetization timelines. So it's like, yeah, everybody's excited, but then when it's time to pay the bill, we can't all just stand around and look at each other and be like, well, who's going to pay this exactly? Now, the risk versus reward here is, in the bull case, unique AI plus quantum positioning, NASA partnership, and institutional backing create a multi-year runway if execution can hold here. And on the bear case, a sky-high valuation, insider selling, and long path to revenue make this a risky momentum trade. In terms of, if you're looking to make $1,000 in the next week, this probably is not the play you want to take, because if you get on the wrong side of it, you might lose $1,000 trying to chase it. Now, the options market is pricing for high volatility, meaning traders expect a big swing around whatever happens with this earnings report. So it's a leader in annealing-based quantum tech. It's partnering with NASA and global enterprises and generating minimal revenue to relative valuation. So those are really the things you need to look out in terms of the quantum area. I think, again, whatever happens with IONQ, that should give us a good idea of what happens with QBTS tomorrow morning.
All right, very good, guys. While Max was talking, we saw App 11 drop about 14, almost 15%, went down to 340. It's recovered back quite a bit now. It's up back to about 367. So about a 5% drop since the earnings, or since after hours. IONQ down about, oh, hold on. Sorry. App 11's down about 6%. IONQ's down about 3.5 at this point. Went up to about 42, but now it's dropped down to about 39. I think the big winner today is Duolingo, I was seeing here. Duolingo is up 23% after hours. It peaked over, yeah, it peaked over at Twitter. They had a double beat. Same with App 11. App 11 had a double beat as well. So
it's probably their
future guidance, yeah.
Yeah, because I was gonna say when I wrote App 11's thing earlier this morning, like when I first woke up, because I'm kind of with you in terms of like your perspective that you add on it with like the mobile gaming space, but their big risk, traders lock in profit after a massive 2024 run and stock slides back to like that 350 support level after their earnings call, basically.
Yeah.
Because the bear case for them was slowing growth rates. So the year-over-year growth is strong, but it's still down from the blowout 40% revenue gains in 2024. Valuation premium, there was a 700% surge in 2024. It trades at a rich forward multiple. Any sign of growth plateauing could trigger profit taking. And then expectations obviously are sky high. There were 25 analysts rating it a buy and a consensus target of 471, 21% above its current level. The bar is super high with it, so even a solid beat might not be enough if forward guidance doesn't wow. So it's kind of like when Palantir had to literally pull like a unicorn out of their ass like a year ago, and they were like, well, they did like 100% on EPS and revenue, and they were like, yeah, but nothing in the forward guidance made us that interested in a sense.
Looks like ELF was up a bit more. It's dropping right now, but up 6% so far.
Nice.
Went up till 124 or so. DraftKings hasn't really moved at all. Popped up, came back down.
I feel like DraftKings with these smaller stocks, like they're $45.
Oh, wait,
I think
hold
it's
on.
$45 a share. Like, I feel like we won't see
Yeah, it just
as
had a
soon as
wick
we
up.
said that,
Yep,
it just
shot up.
jumped up 7%
It's coming back
and
down
back down.
though. Yeah. It's an
So
interesting looking candle.
DraftKings will charge a 50-cent fee on all bets in Illinois starting September 1st, aligning with the state's new tax structure of 25 cents on the first 20 million wagers.
Well,
But what's
that's
interesting
one
is
way to
no
make money.
numbers have come. Okay, so they did. Did they be? No, they haven't. Nothing's gotten reported yet.
Okay.
Like if you look under that kind of, the lightning bolt,
Yeah, nothing so far.
how it'll usually be like update us when it reports, or it'll like give the hot signal. That hasn't come up yet. So this might just be the big boys in the background profit taking or trying to pump liquidity to sweep people out.
Yeah.
Trying to sweep out the call buyers.
Yep. IONQ down about 4.5%, 4.6 so far. Let's peek
Let's
at
see what's
JOBY.
By the way, guys, I will be doing pre, after, or post earnings recaps. I'll do a post earnings recap videos for some of the bigger names I'm seeing today. I might do that today, or I might do that tomorrow morning after we have QBTS, Eli Lilly, and a couple others report there as well. And I'm gonna start doing those hopefully on a daily basis or whenever they are relevant at least.
App 11 back to about 4 point, almost 5% down. Only down about 20 bucks from where it was, so that's not too bad, especially
Oh
the
wow,
reaction back
that's
up.
yeah, because it was all the way that low of the day on it,
Yeah, it
or
was down
for
14%.
pre-market.
It was down,
333.93
yeah.
is what I saw.
JOBY is down about 8%. So yeah, I would definitely say Duolingo seems to be the winner out of all these.
Oh, Jesus,
23%.
Joey. Let's see what happened
Duolingo
with
up 23%.
Joby. Okay, Joby Aviation, they had a second quarter 41-cent loss per share.
Ooh, that's bad, yeah.
Yeah,
That's
that was.
it's over 100% what was expected.
I mean, they beat last quarter with a 40% surprise.
and then
Well, you want to
missed
know
by
what's.
over 100% this quarter.
I mean, the sad part is the 7% precise is the estimate was a loss of 18 cents, and they reported a loss of 11 cents. So we're not talking like, oh, a good surprise. We're talking like, oh no, they lost less money than we thought.
Yeah.
That was their
And
only beat
I
since
think
Q2 of 2024.
I think that's kind of also been another one of the themes I've noticed for this earnings is even if a company is going to report better than expected, if they are losing money, the market's still going to pull them down. At least that's what I've seen with a lot of names right now.
Well, and I think Joby, we could have used, let's call it the airline indicator, because we saw UAL, Love, we saw all these companies from aviation already report and essentially get smacked in the face. But if we even take a step further back, and this is why, like, some of those economic report videos I make, you guys might see and like roll your eyes at and go, well, this is going to be boring because it's just going to be him reading through an Excel spreadsheet. Yeah, that might be the case. But also, these will give you a good indication of what to expect for the quarterly earnings reports as well. What'd you just see, Eric?
If you look on my screen right now, this is Joby's quarterly report for Q4 2024. Their net margin was a negative 447,000%.
Oh my God, they
They
just reported.
brought in $55,000 and then they lost their net income. Net income was a negative $246 million.
Oh, it's even worse, dude. Joby Aviation, their
Oh my
second quarter
God.
loss right now is 324.7 million.
Dude, those numbers
That's
are ridiculous.
like, could you imagine going
Yeah.
to your board of directors and being like, all right, so you know how last quarter we lost 246 million? Well, this quarter we're making progress. We lost 324 million.
Oh,
But
App 11's
it's
coming
kind of
back.
recovering.
App 11's coming back. It's only down 1% now.
I guarantee you, to your point, Eric, apps kind of like narrative for the future when it comes to moving more into the mobile game development and more of that space is going to kind of woo investors like the mysterious girl in the club that you don't know is a man, you know? You're like,
Look,
hey, it might be a dude with a mop on his head and some balloons in his shirt, but you know what? He's trying.
I mean, I've heard good things about App 11 in the big picture, and so
I think I have a couple App 11 actually like developed games on my phone that I play pretty religiously, so I'm not shocked there. Because I do feel like in terms of valid like app developers for mobile games is definitely needed in this day and age, especially with our screen addicted what are they, Gen Zers?
mhm.
So it's definitely always going to have a play and a little place in our heart. but it just looks like it's trying to fight above where this resistance of
Yeah.
about 388.07 is.
Yep.
And then it has some support that was established at about 369.29, I would say. So again, it has a long range, but the nice part is a stock that's valued this high with such a big market cap. It can definitely come back. I mean, 132.16 billion for its market capitalization. It has a ton of room for more, let's call them whales, to kind of step into place and get it right back to where it needed to be. We see it happen with UNH. We see it happen with Tesla. There's no reason it's not going to be any different than App11, considering it's more of a event-based ticker, let's call it, especially when it comes to options plays.
Yep. DraftKings up about 5, almost 6% now.
Ooh,
JOBY
yeah.
down 5.5. Jack in the Box. Ooh, Jack in the Box down 5%. Ooh, Elf came all the way back down. Elf is back down to 0.5% up.
Dollar tacos can only take you so far, my man.
Well, I mean, my thought about Jack in the Box was that, I mean, they can't be doing too terribly. I mean, recessionary forces, recessionary times, people do gravitate more toward cheaper foods. But it looks like they've been losing money. EPS negative.
Oh, wow. So DraftKings is actually doing well. So their average wager, it looks like, is increased to about $151. Um, their revenue came in at 6.2 to 6.4 billion, which was greater. And then their 2Q or Q2, I hate how TradingView writes stuff. They just put DraftKings 2Q monthly. Like, no, it's Q2 monthly unique players is up to 3.3 million average monthly unique paying customers. So it looks like in terms of the prediction with like the bigger sports coming back and people stop betting on what dildo color is going to hit a WNBA court next, which by the way, a third dildo has struck a WNBA court and it hit Sophie Cunningham
Nice.
at the LA Sparks game. So it looks like those real sports that people enjoy betting on with real bets are starting to come back. So they're definite. Expect Kevin Hart to come out and have some ridiculous sign-up promos for you to take advantage of this upcoming DraftKings season. Who knows? Maybe we'll get sponsored by DraftKings and not only give you guys some stock tips, but also give you some fun bets to take on Sunday. Who knows? Maybe that's something. Who knows? Maybe I have an AI bot that gives you sports bets automatically. Maybe I built one because I was bored one night.
Do you see
And
the do you see the betting on Angel Reese to miss her first shot?
oh my, yeah, you know those guys got banned. Like they weren't allowed to make those videos anymore because Angel Reese's team came out and was like, you need. Well, LeBron James also came out and if you make pregnancy videos of him, his legal team will come
Yep,
after you and basically sue you.
saw that too.
Yeah, no, those dudes ran. They went like I think 9 for 10
Yeah. Yeah,
on those
I
bets.
remember. I think I saw. Yeah, there's only one game where she made the first shot, and they're always layups too. They're always layups. And here's the interesting one: is I think if you had bet that she missed that first shot and she gets her own rebound, you would have hit over 60 or 70%.
Oh, 100%. Because I
Like
think the
that's
missed one was already. It was like it was always pretty skewed. Like
yeah.
it was already at almost minus 200, which is like you'd have to bet $200 just to win 100 on that. But
She trademarked me bounds.
she just thinks, oh my God, dude. Like
Hey, I
we were
mean,
talking
in
about.
terms of
Yeah.
entertainment and in terms of making money, I mean, she set herself up. Like, I remember seeing an article about how Jessica Simpson did a great job in making herself seem like the dumb blonde and just marketing
Yeah.
the hell out of it and making money off of it. So, if Angel Reese can do this, I mean, I get it. You're marketing yourself as a terrible basketball player, but at the end of the day, if you make a decent amount of money doing it. So, more
I
power to
mean,
you.
I think the big thing, and this is like my argument comes in with the WNBA is the fact that it's a league that is driven off of controversy and drama, like the Real Housewives of Beverly Hills, more than it is basketball, is their number one problem.
Yeah.
So until that kind of gets cleared up, they're never going to get paid more because the skill doesn't matter. It's the controversy that people care about.
I mean,
Like
they've
Dildo Gate
increased.
has been the biggest con has been more entertaining than the
Yeah,
we'll just call it that. We'll call it Dildo Gate.
they'll
We gotta
they'll figure themselves out in due time. I mean, the sponsorships are starting to get there too.
I think they're getting a new media rights deal too, right?
Yeah,
So that'll help. And granted, they're only 20 years old. It took
yeah,
the NBA, what, like 30 or 40 years before they could start paying people to stop being plumbers and electricians in the off season.
yeah.
Who else do we have today? Tomorrow we have Celsius as well reporting, and they have an interesting report because I feel like this is very much, and this is going to sound weird, but it's kind of like a DraftKings narrative. And the reason why is because they have a lot of NCAA football and NFL players who are endorsed by them. They also have NBA teams endorsed by them and NBA players endorsed by them. So when those seasons are active, their sales are obviously up. And then the other thing is the vodka seltzer mislabeling actually gave them more exposure than it did hurt them. So it was able, and they were able to pivot quickly and react in a sense that gave investors confidence that like they were owning up to their mistake and taking responsibility for it versus trying to shove under it like Four Loko did and pull it off the shelves and then come out with a new recipe 3 years later that was just as bad. So it's really like, yeah, that vodka seltzer mislabeling, was that a PR nightmare? Probably. That was probably a PR nightmare for their PR team. But at the end of the day, did they handle it correctly in the sense of they were able to flip it into a bullish script where investors felt a little more at ease than they did stressed out? You bet your booty. So revenue estimates, look, for revenue alone, we're expecting a 60.6% year over year increase with a coming in at 645.5 million. That doesn't seem like a lot, but remember guys, we're talking about a beverage company here that sells one beverage. We're not talking about Coca-Cola, who has Sprite and all these other things. We're talking about Celsius, who only sells, well, Celsius, the energy drink that makes your skin itch sometimes, at least for me. Or also it makes me like shake because just the caffeine concentration in it is actually insane. So I can only drink like half of them. The EPS estimate we're looking at is about 23%, which is not great because we saw 0.28 year over year. International revenue is looking at 27.3 million, up 20% quarter over quarter, and then our year-to-date stock performance is at 48% as well. Analyst price target average is 49.87, and it's what, 42 right now?
Yeah,
I think.
42.85.
So the bull case for them, like I just mentioned, the health and wellness tailwind. The Live Fit platform is hitting with fitness and lifestyle consumers, not just gym rats. Celsius is now a brand, not just a drink. Product innovation on point. Hydration sticks, essentials, seasonal drops. The lineup keeps expanding, giving CELH more shelf space and new revenue streams as well. We also are seeing some global expansion. 27 million in forecasted international revenue shows the early stages of global scaling, a major long-term catalyst. And then we're also seeing strong channel execution. Retail, convenience, and Amazon channels continue to show strength. Product sell-through is also solid, but there is a bear case like there is with everything else. Where there are bulls, you will find bears who are looking to eat them when they sleep. Margins are under pressure with this company. SG&A is spending is climbing. Marketing, logistics, and headcount are all up. Can they scale efficiently? That's one thing you always need to remember with these high growth companies is it doesn't matter about their revenue, it matters about their scaling as well. Because if you're generating revenue, but you're also spending more than what you're headcount costs or what you're bringing in or what your R&D is costing you, then sometimes you may have to start cutting things, which means jobs are going to get cut, people are going to be unhappy, investors will get spooked. EPS decline year over year. Despite massive revenue growth, EPS is projected to fall nearly 18%. That's a yellow flag for operating leverage here. And then we have high expectations are already priced in. With shares up 48% year to date and forward PE near 70, any hiccup in guidance could send bulls running away. What will move CELH after earnings, gross margin trends, guidance for Q3 and full year 2025, international commentary, and sell-through and channel mix. Now, the bull final takeaway here, Celsius is dominating its niche. In Q2, could show it's not slowing down, but rising costs and sky-high expectations leave no room for error. It's a category leader, global expansion story, and high-risk, high-reward setup. Long-term holders, you can just stick with the trend. If you've been in it, you're fine, probably at this point. But it's still a growth beast. But traders, like if you're going day to day on this thing, there's going to be a lot of volatility. So position accordingly. Use trailing stops, use whatever you need to use to protect your capital. Don't let a green trade go red, because this might be one of those times where 25% is a good return, and just get out before they become worthless. Especially if you're not in it for long term, and you're just kind of getting into it where it's not peaking necessarily, but it's kind of peaking, because again, those expectations for Celsius coming in already are ridiculously sky high.
Yep. PE ratio at 136. So
Oh,
that's
Jesus.
pretty high. Market capitalization 11 bill. I will say though, it's kind of sold off before this earnings, so I wouldn't be surprised to see it pop back up afterwards.
Yeah, it might be a sell-off and then their conference call after market, and then in pre-market we might see a gap up, or maybe just like a pop-up more towards when market actually opens, because we'll see some opening orders come in, or we'll see some insider buys come in. But I will say, looking at stacks right now, if we go ahead and look at our CELH, and then we'll go ahead and look at the last 2 weeks, so from the 27th to the 6th. If I go and look at CELH insiders, we're seeing some selling going on here.
Yeah, I saw
We're
that
seeing,
too.
the 4.75 million from William. We're seeing about,
That's a
we're
lot
seeing
of
a couple.
millions that I see at the end of last. Like, look at, okay, 12 mil, 1, 2, 3, 4, 5, 6, 7 of those. Then 4.7 mil, 1, 2, 3, 4, 5, 6, 7, 8, 9. So there's a lot of selling going on over the last week.
Yeah, I was gonna
A
say even
lot of
everything from
selling. Oh
8.4.
my god. It's just selling for the
Yep.
insiders.
There's nobody buying, and
So
that
that's
was
not a good
why.
sign.
No, I'm kind of bearish. That's why I was saying like Celsius, it might, but to your point, Eric, we might see a sell-off, and then these guys might just jump back in because they want a better price, because they're expecting a little bit of a
Yeah.
sell-off here. Let's be honest. Like,
The bullish case I will point out is that on the 23rd we did see CLH. We saw a Stacks AI print. I do believe it saw a little bit higher for a bit. There was $2 million spent on calls for the 55 strike for 2026, so they've got some time on that.
yeah,
Got in at $3.50. That's when it was trading at 44.89. It's dropped a few bucks now, so it's dropped about $3 since then. These puts that just came in earlier today, for 8841. Those puts, about $1 million spent total there. So we definitely could see, if I would say that's not too far in terms of a drop down below 41. So
yeah,
I would still say, yeah, short term probably a little more bearish. I'd say long term though, I have been noticing more people, like, I believe, who probably would have been drinking a Red Bull instead, now grabbing Celsius, or more people buying. And it's all over the store too. Whenever I do go to the grocery
yep.
store, I see their display cases just about everywhere.
They own like an entire section of 7-Eleven out here. It seems. I don't know out there, but like in my 7-Eleven down the street from me, there's like basically 3/4 of one of those doors filled just with like different Celsius
Yeah.
drinks. But I will say one interesting thing I'm seeing here are somebody today sold $66,000 worth of Celsius $33 puts. So that could be, and that's an unusual print that came in as well. So that could be an indication of this person might think that 33 might be that support level it could bounce off of after this earnings drop that we see as well.
That's still a 20% drop though, so.
Yeah, I mean, I don't think it drops 20%, but these are also wildly enough due for August 8th. So these are weeklies as well. So
Yeah.
I would say that's a pretty aggressive bet for 2 days out on an earnings play, on an earnings play.
All right. I'm just going to peek back over at our after hours movers. Pull those back up. Did app continued to drop? App recovered quite a bit. Now it's down about 8, almost 9% now. 8.5% now.
That guidance has to be brutal.
Yeah, DraftKings up about 4%. IONQ down about 2.3% right now. Duolingo. Ooh, pulled back, pretty solid pullback. It was up 23%. Now it's only up about 14 to 15%. We'll see. Does it come back down? But I mean, that PE ratio is still pretty high. ELF. Ooh, ELF came all the way back down. ELF is now negative, now down 3.5%. So it jumped up quite a bit too, and now it's come all the way back down. DraftKings we just saw, but let me pull that back up again. DraftKings up about 3.6%. Jack in the Box down 6%, but it's not a big mover after hours. JOBY.
What was the expected move? I'm interested. I want to start correlating what like people thought the expected move was and then what we actually saw in terms of that move. Like when we see like, oh, plus or minus 15%, did we see 7.5 at the median or like
Yeah,
what
that'd
was,
be interesting to see. Yeah. JOBY down 4.5%. If you guys are still around with us, comment in the chat box. Let me know. What was it? Did you get into any of these? What are you looking for? Maybe is there something coming up tomorrow? If anybody wants as well, let us know. Is there anything you want us to take a look at before we sign off today? I will also say that Snapchat stacks AI position. I do know quite a few people in the Discord are in it. I did grab 10 of those contracts to start off. If it does go against me for a little bit, I might consider averaging down later. But for that type of move, that type of position, it's not too bad. It's a good price point in terms of upside for what your entry is. Anything else, you guys? Waiting around. Let me know if there's anything else you want us to look at before we head out. This guy took a little nap too, so he's feeling a lot better now. Look at that.
That's good. Naps cure all.
Yep. Okay.
I do have trade desk done.
Oh yeah, TTD.
Yeah.
MP.
So,
What's MP? Hold on.
oh,
MP materials.
MP materials. Let's see.
Oh, they're pretty high up on that chart.
Oh wow. Yeah, they got a lot of space down.
EPS is still negative.
Surprised by a penny in their last one.
Some minerals, minerals. Net margin is negative, which is never a good sign. I would definitely say, with that being said, even if they aren't able to beat earnings, you'll probably see a sell-off. Revenue only 46 mil, so it's a pretty small company, or at least the revenue is pretty small.
Yeah, their net income right now is negative
Yeah.
22.65.
Liabilities
Not great.
Terrible. Cash flow,
I just don't like that net margin number because it's negative 37%.
Yep. You got to be careful with names like these. My suggestion often with something like this is, let me pull up stacks too. Stacks for MP. Calls being sold. What are they buying? They got some unusual puts being purchased. Some calls. But you want to compare. So if you take a look at that top one, it is extremely short term. So they've only got till next Friday. $80 strike. But they only spent $67,000. So I would definitely weigh this put underneath. A put for $60 put. $487,000, and then you also have these other two aiming for January. The $40 strike added together is right under a mil. So with that being said, also if you take a look over down at the insider trades as well, at the end of last month we saw 400K. I don't see. Oh, we see that's back in April, so I wouldn't worry about that nearly as much. But we definitely do see general counsel and secretary selling quite a bit of shares. So that's what I'd have to say for MP. I would be more bearish than bullish on this situation. Even though calls, we do see more premiums overall. If I just went for something like the last week or last 2 weeks. You'll see, a lot more call volume. Yeah, it's really those puts really stand out to me. There might be a small pop continue, but overall would be bearish. They've run up a lot from where they're at.
Yeah.
Yeah, the chart's got that look to it. Is they either got to blow expectations out of the water with this earnings to go up further, but if they come in not too high, or just in line, or they miss, this is coming back down toward 62 or so. 62 and a half is probably where I would put it. Thank you, Theodore. Yes. All right. Any other names? As always, I always ask you guys, go ahead and hit that like button for us so we can play the YouTube algorithm. We'll see if we have time tomorrow to do. I will point out as well, we did just acquire TraderLink, Investor Central Club. We're now working with another software. They do more of GEX and VEX, which is gamma and Vanna exposure. It's another way to gauge the sentiment of the markets, something that will add a lot of value and a couple more tools to our tool belt when it comes to the markets. Bear with us. There's a lot of integration stuff and merging that we have to do, so it's going to take us a little bit of time to get that going. But for those that are part of Stacks, those that are a part of Investor Central Club, we're always doing our best to try to make sure that we have that edge in the markets. Heat map. I do believe you have a heat map on. There's a heat map on TradingView you can use.
Yeah, I know there is. I always forget how to find it.
Yeah, I forget how to find it, but there is a way to find it.
And they do it by sector. You can do it by sector. You can do it by, I think, ETF as well.
Mm-hmm.
I want to say.
Yeah, VEX and G. No. VEX and GX, so they're basically there's certain Greeks that exist with the stock market. You are probably most familiar with delta, which is the dollar value in which your option will go up and down according to each dollar move of the equity or the stock. But what's also calculated is the rate of change of that. And as a market maker, you have to make sure that you reduce that exposure to the markets, because they're basically scraping off the top of every single trade. But they also need to make sure that they have enough of shares in order to fulfill orders, and in order to make sure that they don't overexpose themselves to a trade. And so oftentimes price is going to move to certain exposure areas of GEX and VEX, and there's ways to read those charts. I'm still learning a little bit about it, but there is it's a more complex way of reading the markets, more for of a day trading / scalping type of thing. But once we get everything set up, we'll definitely be not only educating you guys, but teaching and showing you guys how it works. But I know Max has a bit more experience in it as well too.
I was gonna say, so one thing, Eric, I will be starting to include outside of, and I apologize if I have not been putting as much options analysis on my page as of recent. If you guys notice and you go to my channel, it's been a lot more article based. There's just been a lot for me to cover. Again, this week, I think like in the last 2 weeks, I've published like probably 40 to 50 articles, if I'm being honest. So like, and if I'm like, that takes up the majority of my day. I'm also kind of on vacation, so I don't have my full setup where I have the 3 monitors in front of me, so I can be like multitasking the way I do. But I do have an exciting announcement next Monday, starting at 8 a.m. EST. We will be getting on live, and we will be going live every day from that day until I turn 35 on August 24th. It's going to be like a mini subathon where we're just going to hang out on Twitch during the day. We're going to trade stocks. We're going to read flow. We're going to bring in some exciting guests. And then at night, we're going to just have fun and get into some debauchery, whether that's trading Solana meme coins, racing cars late at night, whatever the case might be. But it's going to be 3 weeks, 2 weeks to start of just 24/7 straight trading. You guys will get to see everything I do in terms of content creation and how I create these articles for you and what I exactly look for. And we will be seeing how much we can grow our Robinhood account as well by taking some live trades suggested by you guys, and then obviously suggested by Stacks Flow. So be on the lookout for that, because yeah, starting next week, I'm back in the full swing of things. Where I'll be going live daily, and we will be streaming daily as well. So be on the lookout for that in terms of upcoming, I guess, events for us.
Yep. I mean, we're always doing what we can to help you guys out, teach you guys what it is that we know, share the information, and showing you guys how Stacks works and all these other tools that can help give you an edge in the markets. All right, with that being said, that's our show today, our closing bell show. That's Max, Unusual Markets, also known as Trades and Gains. If you want any of his information, the TNG Substack and his YouTube are both going to be linked in the description box below. Our Stacks Beehive is also, we did announce our merger with TraderLink in there, but keep an eye out, sign up for it, because we will be sending out more and additional ideas and more information as we continue. We'll see the rest of you guys in our Discord or in the Stacks app. We'll be back at it. I'll double check what earnings are coming up. We might do one more stream this week. If not, we'll probably be back at it at the beginning of next week. All right. Have a great one, you guys. And as always, happy trading.